Yep.
Boom. Matty Mežinskis. What's going on, sir?
Doing fine, my friend. Nice to be here, Marty. It's we've had some great weather actually in Eastern Europe past week, but now it's raining and probably will be for another 2 weeks. So I got to stay inside and work on economic stuff. Actually, just published the old monetary base, and it's good because I've been doing these audio compendiums when I do the Q the quarterly updates, and they definitely get a bit dry, a bit boring, and it's either me talking to myself or me talking to Fernando, which is even worse. It's
Hey,
good. We've done it. I think we did it even last time or one of the last quarters, and done it with a couple other people. It's more enjoyable just doing this with as a pod.
well, I feel honored I'm able to catch you literally minutes after you sent out the Q1 2021 update. Uh,
Absolutely, man.
Let me pull it up here. So, for you freaks, we just jumped into this having a powwow conversation. For any of you guys listening who don't know what we're here to talk about today, Maddie and Fernando at Crypto Voices have been doing a quarterly update on the global monetary base and where Bitcoin falls in line compared to other base monies in the global economy. We've done this is probably our third update episode, but for anybody new here, this is one of my favorite update episodes that we do because this is just an infinitely fascinating topic. And I think it is a signal in a world in which many people are trying to figure out what is the best thing to compare Bitcoin to. And I think Maddie and Fernando have really honed in on global base monies as the perfect comparison. As I pull up this chart, is there anything you want to add to that,
Yeah,
Maddie?
no, that pretty much does it. I think it's actually good to do it live on YouTube because there are a lot of charts, and just speaking over it on the audio forum only is not necessarily always the best. So yeah, it is very good, I think, to do this. Um, do it this time of video. That's cool. Um, and yeah, I mean, this is something like I sound like a broken record for those loyal listeners of mine. Fernando and I, we've been talking about this for 4 years. I mean, this is, as you see, it's update number 12. So this will complete 3 years of updates that I've done. It's mostly me now. Fernando he's focusing more on his Portuguese audience, Brazilian Portuguese speaking audience, doing a lot of economic stuff these days. But we still talk about a lot of these developments and jump throw ideas off of each other. But yeah, we've been talking about it for years and years, and I think it's always a topic. It's a perennial topic on crypto Twitter or uh, in the media. Sort of what do these 21 million units of Bitcoin, what do they compare to in the existing legacy financial system? Do they compare to gold, silver? How does it fit in? And so I didn't really see anything over the years that was doing the job. So I just thought I gotta create one on my own. And yeah, I'm flexing a little bit there because I am proud of it. You won't find this anywhere. It's not in the IMF, BIS, World Bank. There are no databases where they publish the global monetary base of all um, currencies. We do 30 currencies as the top floating 30 currencies in the world. Before I get into it, and I'll say it, I'm sure, well, later in the episode as well. I've been spending a lot of time on this actually, personally for the website. It's going to be majorly boosted. Um, those that are really into this will know it's an extremely slowly loading website. I do a lot of these charts live, like through Google Sheets. Some of them through Excel. Like it's a one man band doing a lot of this stuff. So I've got they'll be very interactive. They'll be very good in the next few quarters. It's probably going to take a couple quarters still, honestly, but because there's so much data. I mean, I've been through like 55 balance sheets. This is the top 30. We'll keep it growing, and it's just the point is just to really try to systematize. And these supplies do exist. You just got to try to understand them economically, work through them, and then from there, I think you you the dear listener or viewer, Bitcoin fan or not, you can make your decision on like sort of what that means from there or what steps you want to take. But definitely, I think that Bitcoiners around the world have been like educating tons of people about finance and economics and personal financial sovereignty, as we all know. This goes from like the developer technical level to doing maybe a little bit more like economic stuff like we're doing. It's just it's a great thing, and that I think that Bitcoiners like sort of are always there with hard facts and charts and graphs. No matter what sort of fallacious claim you might make, like olive oil standards or whatnot, you're going to get Bitcoiners quickly swoop in with the real numbers and just really, 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 I provide, a lot of hard data. And so that's what I'm trying to do here as well. And then just to remind people again, why we call it the monetary base, that's the one that compares to Bitcoin. The very first person in the Bitcoin space to recognize this was the great Al Finney. Did a post on Bitcoin Talk way back in the day. I've quoted it many times. Many other people have quoted it many times. And I would say, again, not to flex too much, but I would say Fernando and I probably have been the most rigorous of this. Is like we've interviewed economists. We've asked them this question, like, is this the one? Do you think this is the supply that makes most sense? Why does it make the most sense? And yeah, so I do this one of these days. I'm going to have to stop doing these lengthy introductions about, why, how, what is it? But I think at this point, it's just people are still starting to understand Bitcoin, starting to understand its value proposition. So you just got to keep explaining it at the beginning. So we're setting the stage, like we're laying down the landscape. We're in the arena here of like a financial asset that compares to Bitcoin. So that's called the global monetary base. In the fiat world, it's just two things. It's the physical notes and coin that you know and love or hate. You stick in your wallet. The actual cash, the actual currency units that each central bank produces. Only the central bank produces this. This is a centuries old thing. They have a monopoly on the money supply. And then the other thing is what you call the reserve account, or the commercial bank reserve account with the central bank. That's kind of like a digital supply, I call it. But it does, we don't need a digital world for that to happen. Back in the day, pre-internet, gold exchange standard, you can look at central bank balance sheets around the world. They still called it the monetary base. It was notes and coin in circulation plus the reserve account, which is basically each bank's account with their respective central bank. So it's the end of the line. That's how banks settle among themselves. So you can think of it sort of as banking level and as we as a public level, like we as a public, the end of the line, final settlement will always take place with these notes and coins. It's also, there's also other similarities, obviously, as we know with Bitcoin they're freely floating. They're kind of anonymous, even more anonymous than Bitcoin, notes and coins. And other things that have similar characteristics as Bitcoin. And then, of course, the commercial bank reserve account, that's how literally the end of the line of settling in the banking system occurs. So at the end of the day, literally, you have all these checks, Venmo payments, whatever. We call those things money, and they are in some respects. They're money-ish type things. Moneyness is a term that Hayek used. All of those things are used to settle debts all around the world all the time. But those are claims with each banking system, each bank in the banking system. And the only way that you can actually see, okay, where do those banks sit at the end of the day when you go up, 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 literally to the end, is how do those banks clear with one another? Does one bank owe another bank, 100 billion or whatever, and they net it all out? And that's where they net it out at the central bank level. So that again would be analogous to the Bitcoin system. We're already having plenty of layers in the Bitcoin system, whether it's Lightning, which is unique in itself to economics and banking history, or whether it's simply exchanges, which are basically Bitcoin banks. Hal Finney wrote about that as well. We have exchanges with, when you have the Bitcoin, when you log on an exchange and you see, X amount of Bitcoin on your exchange dashboard, that Bitcoin is not, any Bitcoiner worth their salt will know that Bitcoin does not belong to you. That's the exchange's Bitcoin. It's not yours. But that doesn't mean you have nothing. You just, people don't answer the second question. What do you have? You have a claim. So you have a claim on that Bitcoin, but that's not base money Bitcoin then, is it? So to find that base money Bitcoin, you got to go all the way back to the chain. Every 10 minutes, Bitcoin balances the budget. Every 10 minutes, these UTXOs. They're settling again and again and again. That is, those Bitcoins that, will eventually be a little bit under 21 million Bitcoins globally, final settlement. That's perfectly analogous, completely analogous to what happens in the modern financial system today with what we call these bank reserves. That's how the banks, literally the giants of the financial system, banks and financial institutions, how they settle among each other. So this is why Bitcoin is settlement media, settlement money, and this is why it's compared to base money. So,
well, before we jump into the update, Q4 2020 to Q1 2021, a lot has gone on. You've received some hate on Twitter from the traditional financial media coming at you, particularly Francis Coppola and our friend Joe Weisenthal, saying that this is not the correct metric to benchmark Bitcoin with. What would your description of their argument be in your response to that argument?
Yeah, so I'm absolutely delighted that the more and more I post this, the more and more, just posting facts and data and numbers triggers people in the traditional financial news arena, the traditional financial marketplace, whatever you want to call it. I'm absolutely delighted that it's triggering more and more people. Miss Coppola, she's not very kind usually in her words to many Bitcoiners. I think many Bitcoiners will relate to this. At one point she blocked me, then she unblocked me to talk about how it wasn't right more. But she's never really given an argument. It's clear that she hasn't read anything of it. The only thing I can say that what she has written, the most hilarious one was, I don't think he knows what the monetary base is. And I mean, when, if you want to engage in real debate, first of all, it's not going to happen on Twitter. Like, you're not going to gaslight me. Like, I just do not care what you think if you don't understand what it is. But just to say that I don't understand what the monetary base is, just to make that statement as like you're going in argument when this is update number 12, quarterly update number 12. As I said, we've been talking about this for years. Obviously, that doesn't really merit a response. And based on what little I have read of what she said, it's clear that she hasn't read anything that I have written about it. And so many things would indicate that she probably herself doesn't understand what the monetary base is. So that would be her. Joe is funny as well. He wrote an article after the Q4 2020 was released, and I was speaking with Nick. Actually, did two shows with Nick. It was funny. One of them got lost, and then it wasn't lost, so he posted the original one. So it was a little bit late. It wasn't that long ago, maybe less than a month ago when he posted the pod.
Like April 7th, I believe.
Yeah, about a month ago. Listeners can find it, but that was regarding Q4. We recorded that actually like start of February. It takes about a month to get to the full prior quarter, of the data. So here we are in May, talking about start of May, talking about Q1. In any event, what to say about Joe? I should find the tweet. I was thinking about it, but I don't have the tweet. Well, here's the funny thing. So I saw this a couple times. I've engaged with him on it before. One of the going in arguments, and also like this throwaway line, so he wrote a newsletter about it, was that he doesn't see the value of the exhibit because Japan is so high as far as the global monetary base comparable value. He doesn't see the value of that. He thinks that it's kind of a worthless comparison. Now he didn't go any further, but this is very curious to me because again, this is someone who works for Bloomberg, presumably, understands how data driven a network it is. And so just to sort of, shrug off, mountains of research, facts, inflation rates, we can, if you want to go to tweet, actually, let me find it for you really quick. Just go a couple tweets down. The first picture will show you how big Japan's monetary base is. It's tweet 10. It's tweet 10.
I got Joe's response up. Sorry,
Yeah,
Freaks.
and I can paraphrase it. It's fine. I mean, go to sweet. Well, I can't paraphrase all that actually. In fact, but I know one of the main ones he was talking about. So tweet 10 here. Then we got the dollar, the yuan, Chinese yuan, the European euro, and the Japanese yen. Those are the four largest currencies in the world. Most people probably believe that and understand that. It's not a surprise to them. And then the formerly Great British Pound is that lighter blue that's just above the Japanese yen. And then the remaining 25 currencies, the top 25 floating currencies in the world, are above that. So you see just the massive Pareto distribution already just with that chart. But there have been many quarters where, so actually, hopefully to please Joe, this quarter, the dollar is larger than the yen. So maybe he will, maybe if he cares, again, I don't care if he cares one way or another, but the dollar is larger than the yen this quarter. So maybe he'll think it's a bit more valid. But as I understand, what he was saying was Japan, since it has such a large monetary base, it's just worthless because obviously the dollar is the largest currency in the world. A fact that I have repeatedly talked about again and again and again. I do it every update, and I also do it with every audio compendium. I'll do it here as well. When we're talking about the monetary base, we're talking about something that is not a claim. If you're going to talk about all the other claims, euro dollars and contracts that are priced in dollars, gold is priced in dollars, oil is priced in dollars, obviously, yes, the network effect of what we call the dollar is gigantic. But that is not what we're talking about here. That is not what compares to 21 million Bitcoin. Bitcoin has claims as well. I just talked about it. It's a bit nebulous. It's not as, hashed out as these regulated banking industries are and banking markets. But, we got creditors for Mt. Gox still. We got Bitfinex, Tether, sort of other holders that have mixed some interesting, there are plenty of claims that have floated about on top of the actual UTXOs, the actual Bitcoin that underlies those claims. So Bitcoin is no different than the rest of the financial system there. In any event, going back to this thing about Japan, my question to Joe about Japan, and I've said this before, is like, what are you actually saying about Japan then? If Japan, we could go full SJW if we want. Like, what I just want to know, what does he have against Japan? So let's actually break this out. So, I am sitting here talking to you in the former Soviet Union. I've been very vocal about my criticism towards, Putin and all this other stuff that's going on today. We could maybe talk about that if we have time. But in any event, I love bringing all actual race in actually to economic discussions because it just, the Soviet Union just blasts and nullifies any argument that any SJW, BLM type in America might have today. I'm getting to Japan, but you'll see. So, what was the Soviet Union? It was a super state of mostly white Eastern European people, colonized by Moscow, this town, which has never really been ruled. Whatever, we talk about the history of that, but all mostly white in the Soviet Union. All of the Eastern European countries were white that were not in the Soviet Union. Some that were, like the Baltics, the all occupied ones, and they all failed miserably in the 50s, 60s, 70s, 80s as far as the economic growth. Just absolutely demolished, destroyed in terms of their growth compared to the West. A complete mirage. Come here. I think I've said it on your show. I'm always happy to buy people beer. If you come over to Eastern Europe, whenever you get your vaccine or whatever you need to do to travel, happy to buy you beer outside here, whatever you want, whatever you're comfortable with. And we can see how, on the countryside, they're still, they're vastly, vastly behind the Western world. As far as their development. Their capital cities are great, but whatever, they're behind. It's a bunch of white people in Eastern Europe, all white, horrible, horrible economic circumstances for the entirety of the Cold War. So if there were some SJW, BLM type person in the Western world today saying, our economic problems are rooted in racism, my shining example is simply the white former Soviet Union countries who has just been absolutely destroyed economically during the Cold War, after World War II. What was the reason? Had nothing to do with racism. They were all white. I'm going to say it again and again and again. They were all white. They simply practiced socialism. Socialism autocratic, dictatorial, awful regimes, price controls. They didn't have a market. That's why they were horrible. Now we get to Japan. For 50 years, the United States was number one in economic growth. Soviet Union was number two. Now, I just told you how fake the Soviet Union was. The numbers were absolutely fake. They had massive debt from Western Germany secretly in the 70s and 80s. And one might actually ask, why did this superstate collapse in 1991 if it was supposedly the second largest economy in the world in the 80s? Obviously, because they didn't have any private property rights, socialism, et cetera, et cetera, et cetera. It's the greatest example in the world. Of course, there are many other failures, Mao and Asian atrocities these days in China. I'm not a fan of their Communist Party either, the party, not the Chinese people, but the party. So here we have Japan. Marty, do you know where Japan was ranked in the 70s, 80s, and 90s as far as all the countries? GDP is like the power of their economy.
Electronics weren't big yet. So I'm going to guess outside the top 10?
They were getting there, actually. They were getting, sorry, no, it's much higher. Electronics were getting there in the 80s. And so if you were a person in the US, the financial headlines in the 80s would be like, Japan is coming to take us over. So you had Sony, you had all of these, I just love the example of Nintendo. I mean, 80s, 90s, I know you're a little bit behind me, but like once you beat the big boss, what do the credits say 99% of the time? They're all Japanese, right? Massively creative country. They did have a huge tech boom in the 70s and 80s. So the answer is, Marty, they were number 3, literally neck and neck was the Soviet Union. I just told you again, Soviet Union was a complete mirage, failure, catastrophic destruction of a huge generation of wealth and, morally just absolutely destroyed a generation of people in Eastern Europe, all white, by the way, all white. So Japan was number 2. Japan, 70s, 80s, 90s. They like Tokyo, anywhere like the, Nintendo, Sega, Sony. This was a juggernaut of a country that was working extremely hard after being on the opposite side of the Western world in World War II, and was absolutely an economic powerhouse. I mean, millennia of civilization and organization. Absolutely beautiful country, fantastic people, and very, very powerful when it comes to the economy. Japan is number 2. Japan is number 2 economy, basically through the entire Cold War into the 90s. Now, they did have a credit boom and bust. They have a lot of problems. But the U.S. also had credit boom and bust, lots of problems. Everybody has lots of problems. Growing economy, sometimes there's slowing age. There's this age gap that Japan has that's talked about a lot. They have slowing demographics, these types of things. But plenty of other people in the Western world have that, in Europe as well. So my question again, this is actually a lot answer than I was, imagining when I was thinking about whatever he was saying about Japan, because he never clarified it. But he basically said, throw out the whole exhibit because Japan is at the top. Doesn't make any sense. What does he have against Japan? I mean, Japan is a massively powerful, historically amazing juggernaut in the economy. And by the way, after the United States, China, and the bloc of Eurozone nations, not the European Union, Eurozone nations, which is less, like 19 countries, Japan is number 4, barely, as far as GDP goes. So Japan is a massive economy still in the world today. And yeah, Japan prints money like the best of them. They've been printing money 10 years before the Federal Reserve's been printing money. They've had lots of inflation. They've been doing what Murray Rothbard said. I always mention this, right? The Austrians, the hardcore, usually they were kind of gold money types, but one of the things that they would always say, and which never really happened during their lifetime, was, look, central banks may be buying government bonds today, but they'll start buying other assets tomorrow. They never really got to see that. Now it's happening. And Japan is leading the pack. Japan is actually, paradoxically, has been the reason why its monetary base is kind of high as well, is it has a lot of investments it has Apple, Facebook, it has stock in real estate companies. It's not just its government bonds, which it owns. But in any event, Japan's a major country. I don't know what he's got against Japan. And just to sort of, I don't know, shrug it off because Japan is in there, it just shows me that he's doesn't know enough about Japan. And I'd like to hear from him what he's got against Japan. So that's about Japan. That was way longer than I thought it would go. Sorry.
I love the context is incredible, and I feel incredibly ignorant for not realizing that the electronics boom happened in the 70s and 80s. But
no, yeah, it's maybe it's exemplifies what he's thinking as well. Maybe he's just not thinking about it that way. I didn't mean it to come off that way for you, Marty. I'm just saying, they were leading the way. Like if you were reading financial news in the 80s, you say Japan is coming, like they're coming to take us over. This is a national crisis. And of course, they had their own credit bubble. They had problems just like we had our own credit bubble. We had problems. I'm not saying anyone's perfect any which way, but I'm literally baffled to just X off. Like literally, you just want to cross someone off this list for some reason. Like, I don't know. I don't know what his problem with Japan is. It's a great country. It's a great economy. And I'll get to the tweet in a second. If you want to say something, I'll get to this.
No, and I think Joe's discounting of Japan or just throwing it to the wayside, like, Japan's in there, it doesn't make any sense. It just highlights the high time preference nature of our society, right? Like like you just described how big of a juggernaut Japan was only decades ago,
and still is number 4 in the world after these 3 blocks.
Yeah, it is pretty weird that you're just able to be like, oh no, it's not the euro or the dollar.
Yeah, so he didn't like that it wasn't the dollar, basically, so he wanted to just throw the whole thing out. That was the main part, but he never backed it up, never said anything. And then all I want to say, as well as this comment, I responded to him. He didn't respond to me. This is his little, words, sort of word summary of his article he tweeted. I'll just read this because literally every single word in here is wrong, like financially, economically, accounting-wise. This is his conclusion. And again, monetary base is really just a reflection of the term structure of government liabilities. Does the central bank want to have long-dated liabilities, treasuries, or short-dated ones, reserves? Says nothing about the relative size of the currency. All right, let's just break this down. And again, monetary base is really just a reflection of the term structure of government liabilities. I don't even know what he's saying. It doesn't make any sense. But apparently he's saying that the central bank has a lot to do with government liabilities. I actually agree with that statement. But what he might not know is the mouthpiece that he is representing, the mainstream media, they don't say that at all. Remember, central banks are supposed to be independent of their governments. They're supposed to be independent. They work, in the U.S.'s case, they work for maximizing employment, and they work for keeping as low as we can, managing inflation. Those are the dual mandate of the Federal Reserve. Other central banks have different mandates. Europeans are just about keeping inflation in check because of their, ravaged past after World War I and World War II. Anyway, in any event, monetary base is really just a reflection of the term structure of government liabilities. He doesn't seem to understand. I'll go back to this statement, but he doesn't seem to understand how the monetary base actually works. So the next point, does the central bank want to have long-dated liabilities, treasuries, or short-dated ones, reserves? So he's saying, as far as I can tell, is the central bank has treasuries as liabilities or reserves as liabilities. This is just, I've said it again and again and again. The reserves and the currency, they are liabilities of the central bank, but what they hold are treasuries. That is their asset. So what he's saying here, as far as I can tell, is just he doesn't even know how it works. He doesn't know where treasuries sit on the central bank balance sheet. He doesn't know where reserves sit on the central bank balance sheet. Does the central bank want to have long-dated liabilities, treasuries, or short-dated ones, reserves? He's making it seem like there's some either or some sort of managing it this way. It's never either or. It's always and. If the central bank wants to print money, they increase reserves. And once they do that, they buy treasuries from the market. They buy them from banks. So it's always and. They're opposite sides of the balance sheet. And I wrote this to him. Reserves go up, their treasuries, the Federal Reserve's treasuries on its balance sheet as an asset goes up. Reserves are liability, treasuries are an asset. So again, it shows me he doesn't understand what he's talking about when we're talking about the monetary base. Does the central bank want to have long-dated liabilities, treasuries, or short-dated ones, reserves? It's not, treasuries are not a liability on the central bank's balance sheet. They're an asset. And reserves are a liability, is correct. But again, it's not either or, it's always and. So he's not even accounting-wise explaining how the process works. So I don't get it there. And then last one, says nothing about the relative size of the currency. This is groundbreaking. It says nothing about the relative size of the currency. The last I checked, monetary policy, which is implemented via the manipulation of the monetary base, which is the central bank's balance sheet. Monetary policy, last I checked, had to do with money, had to do with the size of money. So to say that monetary policy, that is manipulating the monetary base, has nothing to do with the relative size of the currency. I mean, where does one go from there? I mean, it's almost like he's afraid to admit that, yes, this is the money supply that you need to be looking at because it is exploding, which is another thing. But we're talking about monetary policy. So again, it seems like a bunch of jumbled words that weren't really put together with any sort of understanding of actually how it worked. So I don't know. Does that make sense to you? Have any questions there?
Yeah, it does. It makes a ton of sense. And then even going back to like the treasuries, long dated treasuries, the Fed is openly, I think this is like a semantics argument, but they've also been buying short dated treasuries as well. Correct? Right.
Yeah, they primarily buy short dated treasuries. They have this thing. They used to this Operation Twist. Remember, they were buying some long dated. But he's saying that like the liabilities are not in the central bank. Like treasuries or gilts, what we call them from the UK, or ONS is the German treasury, or JGBs is the Japanese government bond. They're not liabilities of the central bank. They're assets of the central bank. He's not even using the right words. Like he doesn't know the difference. And this is why I'm getting to the first step. That's why I hate economic arguments and economic blustering. It's so full of hubris. Economics is the only field that I know where you can literally just say the opposite of the fact of the definition. And people like kind of take you seriously because they don't understand the difference. Like if I was a surgeon and I said, hand me that fork. And I was talking to my, colleague, hand me that fork. And think, what? That fork right there. And like, you mean like the scalpel? Oh, right. The scalpel. Like, I mean,
they'd be like, what?
Any other field of professional, rigorous sort of, rigorous professionalism, let's say, where you actually need to do a job, you can't just speak in words where no one understands you. You can't just not use factual words, like real words that mean something. That's why I was never a Bitcoin Cash person because I understood the word Bitcoin. I understood, the network Bitcoin. Like it's the same type of thing. Like he's not even using the right language, and he's trying to make some groundbreaking thing about the monetary base is really not that big a deal. And he doesn't understand why it should be a part of any sort of scholarly analysis or anything. It doesn't make any sense at all. And so again, that goes back to the first statement. Monetary base is just a reflection of the term structure of government liabilities. The central bank's not the one that issues treasuries. The treasury is. The government, when it runs a deficit, when it can't pay for stuff, it has to sell debt. It has to sell bonds. It's like basic economics 101. The central bank does not issue the debt. The treasury does. And so this is really the crux of it. Like economists today, George Selgin, who we can talk about later as well, he's always mentioned this. I thoroughly agree with him. Like economists, papers, people that talk about stuff, they never want to talk about the supply. Another beautiful spotlight that Bitcoin has shined a light on directly, succinctly, clearly, and wonderfully is the supply matters, right? I mean, In economics, Cadillac, like in very simple terms, price, supply, demand, price, supply, demand. These things matter. Bitcoin is very, very clear, but we don't even know what the money supply is of the US, or like we're trying to figure that out. That's why I'm doing this exhibit here. That is the money. The central bank controls the money. They do not control the amount of treasuries. The amount of treasuries is controlled by the treasury. And so if he's saying that, oh, they work hand in hand, I'd actually agree with him. But he should, that's not
openly admit that.
Yeah, first of all, that's not the arguments you'll hear on mainstream media. The central bank is independent. They're working for the people, controlling unemployment, all of these things, and also interest rates. People love to talk about interest rates, like a marginal change in interest rate here will change the debt payments here. We can afford to do this stimulus there. All of that stuff is just very, very short-term stuff, but it completely ignores the main thing, which is the supply. Where would that impetus to change interest rate comes from? It comes from the supply of money. So to clarify, monetary policy, like why does a central bank exist? It exists for one reason. It exists for the government to pay for its unpaid debts. And it's those debts that the government doesn't want to simply borrow from the general public by itself. That's why it's there. It's definitely there as well for the banks. There's monopolistic things, all this other stuff about keeping interest rates low for its banking friends. And I have I really like banking history. We can talk about banks. I have no problem with banks, but banks that are in this monopolistic structure of central banking, that's where I would have a problem with. And I think many other Austrians and Bitcoiners do as well. So to clarify, the only thing that the central bank does at the end of the day is it buys its own government's bonds out of the marketplace. So if you're buying, and it does that by printing money, you print money, you buy bonds. What happens if you did not have this buyer before? All of a sudden you have this huge buyer that has monopolistic privilege. It can print money, it can buy bonds. What does that do to the government, the price of government debt? It will go up. It'll go up because you have this buyer here, this massive buyer that was not there before. That's what the central bank is there. So it's there to prop up. It's the creative floor in the price of government debt. It's to keep sort of the wheels turning, but in a way that seems better because presumably, again, economically, all I can say is like if ceteris paribus, if the central bank was not there buying those bonds, the price would fall. And again, bonds, just like real estate, price is inverse to yield or the interest rate. So if the price falls, rates will rise. It'll be painful for people.
Yeah. So essentially, central banks stepping in, lender of last resort, holding that price stable so the interest rate remains relatively low so that the government in the economy that the government represents doesn't have to grow at a rate at which it would not be able to pay back the debt it's accrued. Is that a good way?
At a rate that's just ceteris paribus, clearly going to be a higher interest rate than if that central bank was not there. So that's what they do. That's what the central bank does. It buys the government's liabilities. But again, monetary base is just a reflection of the term structure of government liability. Monetary base has nothing to do with the term. The Treasury sets the term structure. They set it in the market. Investors yield. Okay, I want to buy a 1 month bill, or I want to buy a 30-year bond. Austria, I think, is a 100-year bond. There's different marketplaces, different things. They're, some are crazy, some are normal. The market sets those things, and that's a reflection between the market and the government. And, is government good? Is government bad? Monetary base it's just words that are clearly show that he doesn't understand the economics of how it works. And again, so just to say, does the central bank want to have long dated liabilities, treasuries, or short dated ones, reserves? You just got to look at a balance sheet, man. I mean, that's accounting 101. This is economics 101. The central bank has nothing to do with the production of government debt. At least so your networks say, right? They're completely independent. The government does its thing. If it needs someone to buy its debt, well, the Federal Reserve might decide to come in and buy it. But that has nothing to do with any buying or selling of government debt will never change the term structure of government liability. The Treasury, when the Federal Reserve owns the Treasury bonds, instead of like a pension fund or a bank or family office, the Treasury still has to pay interest, the Federal Reserve. Like, it didn't change, it is true that central banks typically give back most of the, not most, but a certain percentage of the interest back to the treasury after they pay their expenses. That is true. That is true. But still, they pay interest. I mean, the debt is still sitting there. It's just a question of, is it owned by banks or is it owned by the central bank? But again, at the end of the day, like, again, I'm giving longer answers than I thought when I was just thinking about talking with you. But the words
matter.
Yeah, the words matter. In this summary, it clearly shows he doesn't know what the monetary base means. It clearly shows he doesn't know that when treasuries sit on a central bank balance sheet, they are assets. They're not liabilities. They're assets for the central bank. And the reserves, the monetary base, is what matches that typically, mostly on the other side. And that's how they get money into the system. That's how they print money. And that's also how the state kind of keeps ahead of the market in general, keeps the price of its bonds higher in general than they otherwise would be, ceteris paribus, because there's a floor being set by this monopolistic central bank, which has, apparently the independent privilege or independent authority to buy its bonds out of the marketplace if it chooses. If it buys the bonds, more reserves are going into the economy. That is an increase in the money supply. If it sells the reserves, if it sells the treasuries, did I say reserves? If it buys the treasuries, it prints money, prints reserves into banks. The reserves go into the market. That's an increase in the money stock. Has everything to do with the relative size of the currency. Going to his last statement. Treasuries come out of the market. They sit in the central bank, but they're still, they still need to have interest paid on them. It's a term structure, has nothing to do with it. And then when the central bank wants to decrease the money supply, it sells those same bonds back to the bank. Those banks and pension funds, family offices, whatever, they pay for those bonds with reserves, which go back into the central bank. Central bank can then burn them or whatever and remove that money. But it has everything to do with the money supply. This is a definition of monetary policy. Last I checked, monetary policy had to do with money. Like, we're talking about money. We're talking about Bitcoin. Bitcoin is money. This has everything to do square on with what, Bitcoin is about, money is about, and just the word basic money. So it's a laughable statement. You got to get correct with the words, and treasuries on the central bank balance sheet, assets, they're not liabilities.
Yeah, I mean, it should be pretty straightforward that the treasuries are liabilities of the treasury.
Of government.
You have to pay that back. You have to grow your economy, a profitable economy, a growing GDP, if you will, to pay back the interest on those treasuries that you've issued. Yeah, it should be pretty straightforward. I mean, that is economics 101.
Yeah, and I'll also say I believe people like Francis Coppola never give us many Bitcoiners actually producing content the benefit of the doubt. Like, if you had tuned into our podcast, if you actually listened to what we were saying from 2014 to 2019, we were never saying that the Federal Reserve was printing money. You never would have caught that from us on our show. We started in 2017, but if you're looking at this chart, it's still on the screen, right? Look at that green. That's the base, monetary base of the U.S. dollar. See, from mid 2014 down to 2019, they were trying to take money out of the economy. They're letting, they were letting some of those treasuries expire. They weren't rolling them over. They weren't putting more money into the banking system. They were trying to use this word that was used all the time, normalize from the huge QE that happened after the global financial crisis. So, words matter. There is a money supply that means something. We talk about the printing press. This is the printing press. So you would never heard it from us that the central bank of the United States was printing from 2014 to 2019. Other central banks did. European Union did. China did. Other central banks were increasing. Japan did. But, the point is, like, they're very unfair to Bitcoiners in general, because Bitcoiners come up with a lot of great content. They educate people. They're very friendly. They're very good with their time. And it's just real stuff. Like, if I was I get on these tangents. If I was like in my 20s,
on the tangent, don't worry about the tangents. Keep tangent.
I would And I was this person as well, right? I was trying to get to the bottom of this, understanding the money printing, understanding the monopoly, understanding legal tender laws, understanding FDIC insurance. Yeah, you get, if this stuff matters and you believe it matters and you want to understand it, you do. Like, I can understand why some Bitcoiners, a lot who are young or in their 20s, that might say stuff like, central bank is printing all the time or this and that. It's just, it's natural. But the great content is not coming from like these, Harvard economists or whatever, who Larry White always mentions. Larry White always makes this caveat, or this, like, points out that, where is the budget for these economic papers and these, rationalizations for quantitative easing? Where are they coming from? It's obviously government grants and subsidies. So, it's clear who's wagging what tail there. That's that's coming out. But Bitcoiners, they don't have that. Of course, we have our biases. We have our what we appreciate and what we is important to us. Like, you and I, we might not agree on everything, but our and you might not even do well. This is why I'm on your show, right? And this is how it is. This is how it works with everything. People have things that are important to them. Like, this is one of the things that I do in my own time. Maybe you can get it into something a little bit more money making in the future. But I'm doing what I do because I think that it's important. I think it's important to understand. I think it's important to educate people about it. Likewise, you're doing the same with a lot of other people every day, all day, right? Other guests. And like, yeah, we do have biases. Sometimes we might not agree here or there. And it is true. We at the end goal, we all agree, right? We all agree that there is no control of the money supply with these legacy fiat financial systems. Bitcoin solves so many other problems, and then technologically, what developers are working on is just incredible. I mean, with Schnorr Taproot, when that gets going, like, it's just going to be, there's incredible developments of the legacy financial system. My point of just saying all that is, if you look hard at the Bitcoin community, they're educating very specifically with very real things, like very tangible things, very real world things. And these sort of train spotting, no skin in the game, just sort of fluff words. When you just look at like one paragraph, concluding paragraph in this case, it's obvious to see that there's no skin in the game and just does not have any understanding of what the facts of the matter are. I think it's mind-boggling. It's mind-boggling that, I don't know, if I were a subscriber to him or any of these other people that talk so much shit about Bitcoin, what does Joe know about Japan that I don't? Like, should I be shorting the Japanese yen? I mean, put your money where your mouth is. I mean, like, if you just think that we should just scratch Japan off this list because you know something that we don't, tell me. I just don't know where they're going, right? Like, we're putting like real cold hard facts, real numbers. I mean, the development behind this stuff is incredible. Yeah, our conclusion is we're biased. We have, we're invested for sure. But at least we have skin in the game. And so again, if I was a 20-year-old reading this stuff, I would not waste my time. I've done this, by the way, in my 20s. Like, if you're going to read newsletters and stuff, you're just going to get a few charts and then a bunch of basically your biases will be confirmed for the rest of that stuff. And so go for it, do it if you want. But like, really, if you want to really understand it, get an education on it, I would say, read a lot of the old Austrian literature, Mises, Rothbard, Hayek. I'm a huge fan of the free banking school as well, which I think we can derive some nuggets about the importance of banking without a central bank interfering. So that would be, Dr. Selgin and Dr. White. My listeners know that as well. Those are the places where you're really going to start to understand if you want to like really get a grasp of how the financial system works, or I'm happy to flex a little bit and pump what we've been doing. I mean, I'm not going to stop publishing this just because some random, trolling mainstream known coiners or whatever you would call them, I don't know, just don't think Japan should be on there. It's really mind-boggling. It is mind-boggling. We all have our biases. I don't deny that I have biases, but you got to start from a place of solid ground. Like, you got to start from real facts, real definitions, real words. You got to understand how the balance sheet works, how the mechanics of money creation work. And newsletters just aren't going to get you that. You're going to get some charts that confirm some words that confirm your biases, or if you don't agree with that, you're not going to read that newsletter. So, that's another general tangent. Like,
No,
maybe I will start a newsletter someday, but now I'm just worried about putting out the facts, man. I'm taking real numbers and putting them down.
Somebody writes a newsletter. I fucked up like the monetary base last month. It's not easy, but I do agree. Bitcoiners wear their biases on their sleeves. Like I had Marty's bent literally top of the newsletter.
I didn't even think about that talking with you about your newsletter.
No, it's okay. It's okay. This comes with the territory. That's the risk I take writing every day. But that's what I say. Like, hey, this is my bent. This is my inclination of the information that I've digested in the last 24 hours. Just wear that on your sleeve. Like, hey, disclaimer. This is what I'm thinking. And I'm a Bitcoiner. I want Bitcoin to succeed. I own Bitcoin. You make that apparent. And I think that's completely ethical. Whereas, like you're saying, the other side, the traditional economic side, is not always as transparent of their intent and their biases as well.
There's no skin in the game, and they're great writers. I mean, Matt Levine, he has a great Bloomberg newsletter I subscribe to. Fantastic, but it's just hilarious to watch him get triggered from Bitcoin and crypto and Dogecoin. He just gets triggered again and again, and writes great stuff. But it's just really interesting to see because it's growing. I mean, you can't deny it. Obviously, the only thing we care about is price. Not you and me, but like the collective we as a society. Like price really, really will push the needle as far as interest and adoption and everything. That's true. It's an unfortunate truth, right? Like not as many people like us like digging into the numbers, trying to understand it. So yeah, it's always this push-pull stuff. I don't know. I'm starting to maybe ramble on a little bit more than I wanted to there, but
I think this is important, nailing down on the definition of the words that we're talking about and the comparisons that we're making and accurately portraying what we're trying to articulate here. That's why I keep having you back on, and I always write about your monetary base update, because I think it is, again, like I said in the beginning of this episode, the most clear signal of Bitcoin comparing it to its competitors, which are base monies. And
I appreciate that, my friend. Definitely do. And my point about newsletters, just to be clear, go for it. I'm speaking specifically like Bitcoiners in their 20s, trying to absorb this stuff. Everybody's going to push their bias for sure. Try to stick with some classical stuff that stood the test of time. What has government done to our money? Old sort of books, pamphlets like this, and then read. Like if you really want to know like what's happening to the money supply, look at the numbers. So that's like what we're trying to do there. But yeah, you're always going to get, there's always going to be bias in whatever anyone puts out. Like Lynn Alden's great, right? She's fantastic. She'll bombard you with information and she does a pretty good job, I think, of not letting her biases come through. But and then you start to get in the world of investing, this or that. So there's definitely there's challenges to wade through some of this stuff. I think if you're a young person trying to soak up a lot of this education, and again, economics. This is what I was thinking about in the back of my mind the whole time. It's like, what other industry can you just say a word backwards, opposite, like not only incorrect but the opposite of correct? Like just you can say these words, they make no sense in the context of how of what you're critiquing or whatever. But then, people just kind of shrug and say, oh yeah, that makes sense. Yeah. Or like, I was even looking at some of these other quotes. Like there's mainstream financial bloggers now quoting, say, oh yeah, that makes sense. Good point, Joe, or whatever. And I'm just like, these guys don't know how it works. They don't know how it works. And It's one thing to just say, okay, money print, money print, money print. Printing press go burr, government's bad, this and that, this and that. I'm just saying, look at the numbers and decide for yourself.
Yeah. Well, let's look at the numbers. Let's dive into it. Like you said, between middle of 2014 to late 2019,
yeah,
the Fed was
not
taking money out of the economy.
Correct.
But that has since changed since the onset of the economic lockdowns and the stimulus that ensued. And we've seen an insane amount of base money growth over the last year and a half now, or year and a couple months to be specific. What stood out to you from Q4 2020 to Q1 2021?
Well, Canada is a country that traditionally was pretty stable and pretty modest as far as like its money printing went. Its supply of its monetary base had a lot of historical good policies surrounding banking and money. They did start a central bank, one of the last to ever start it in the modern world in 1935, I believe. We've talked about that, I think, on your show as well. I've talked about other places. Canada actually has a lot of success in banking. They didn't even feel like they needed to own gold, which was a stupid decision because they sold a lot of their gold and then gold went up. But yeah, in really recent years, they have just exploded on scene. They weren't even in the top 10 last year. And then because of COVID and the amount of printing that they did, I actually made one chart for Rodolfo. Let me see if I can find this link and I'll send it to you. But basically, they were going along at like 7% a year, which is a lot, by the way. But a stable 7% a year for like 80 years. And then since basically January of last year, March of last year, whatever, they've gone at a 280% annualized growth rate, which is obviously just exploding. And, and also to be clear, like when I write these things and I talk about these percentages, it's not like I'm saying, all right, this is fantastic. The numbers are going high. Bitcoin has to do great, yada, yada, yada. It's not a good thing. I mean, like, COVID's not a good thing. The way that governments respond to it's not a good thing. I'm not happy that these things are happening this way. That's just, again, that's another point, by the way. The only sort of catalactic statement, the only economic statement that I make in this exhibit is when I talk about, what does a rising base money supply mean? Well, ceteris paribus, that is all things equal otherwise, a rising base money supply has to equal a rise in prices. It's like one of the most basic economic things, again, right? Like catalactics, economics, supply, demand, price. We have to focus on these things. You can't just look at interest rates. You can't look at what the Federal Reserve is targeting or the ECB is targeting. You got to look at the supply to understand this. Now, there are plenty of things in economics. There's a lot of hubris. There's a lot of things happening from all angles. It's hard to understand some of this stuff, but just focus on the basics, ceteris paribus, all things equal, a rising base money supply has to mean rising prices. Now, the world doesn't work in ceteris paribus, right? So you will have some increase in the demand for money. You will have some crony capitalism. You will have some projects that are fueled and do great because of low interest rates and money printing. You'll have certain people that gain, a small percentage of people that gain. You have more people that lose. But those are the things that really I want to talk about there. So Canada has been really crazy. Also, another one that I added. Let's see if I can find the tweet. It's just, again, going back to the U.S. because that's it's your market. It's many people's market that I talk to as well, my home market as well. If you go to tweets 55.
55. Here we go. I thought I only saw 26 on the.
I started. I have. Twitter lets you only do 25 at once, and then I have to add on more.
There we go.
Peek behind the curtain there, because I have like a database of all those different tweets and change some and whatever.
Let me see. 55. Here we go.
That's a good one too. We'll go back to that. But so talk about like things that might surprise you or change. I wasn't doing this one. And this, by the way, when I get the website up and running and much better, can you click on that? The picture, yeah. Yeah. So this is something that you'll see as well from the new and improved website in the hopefully not too distant future. Starting to again take these hard and real figures of the money supply and then look at other things, and we can start to talk about inflation as well here, Marty. But look at other things that this affects. So let's just run through it. In 2000, so I am obviously being I'm well aware that most of the money printing that the United States did happened after the year 2000, happened after the dot-com boom and bust, and then from then on out. But nonetheless, the monetary base was only about 600 billion in 2000. Now it's 5.8 trillion. Okay, so compounded from those 20 years, that is a 12.1% compound growth, or a doubling every 6.1 years. Doubling is very important, I think, for a lot of people to understand when they're trying to learn this stuff. Like, compounded is the figure you want. Like, that's what a yield is of a government bond. Like, it doesn't matter that if it's a 6-month bond, a 12-month bond, a 36-month bond, a 30-year bond, it's always going to be quoted as a price of the yield. That is like basically how much money you're going to earn once all is said and done. Your coupon payments, and if there's any discount up front paid back, that's the money that you make annualized. And that's the same thing as like an IRR, yield to maturity. You hear these things, compound annual growth. It's a very strong number. The rule of 72 is very helpful, I think, for people learning this stuff. So 10% is fits perfectly with the rule of 72. You would think that a 10% growth over a certain amount of years would mean that the thing would double after 10 years, but that's not how compounding works. Thomas Jefferson said it's the eighth wonder of the world, compounding. The rule of 72 works perfect with 10. So 72 divided by 10, forget the percent sign, just forget the percent sign. 72 divided by 10, a 10% return, that's going to grow, that's going to double. That tells you the doubling time every 7.2 years. So that's what a 10% return would do. So just keep that in mind. Like, that's why I always show compounding. I don't show anything else. I don't track prices, and let's talk about prices in a second, because inflation is always, these stupid debates make their way back into the media about inflation. Again, this is real inflation. This is money growth. This is a classical definition of inflation. So we got the annual GDP in 2000 was about 10 trillion. Now it's 21 trillion. So GDP, as far as a growth rate, only grows 3.7% a year, but money grew 12.1%, something to keep in mind. Another way to put that, $1 base money in 2000 would get you $17 of GDP. In 2021, March, $1 of base money would get you $3.61 of GDP now. So again, I really like looking at things this way. Looking at there's just multiples. We don't have to inflation adjust this. Like, just look at it how it was at one period. Look at how it was in this period. The numerator and the denominator didn't change as a thing. So you don't have to inflation adjust it. Got unemployment as well. Obviously, we're at a higher unemployment, but we're at a way higher monetary base. So you had $87 billion of base money printed per 1% of unemployment in 2000, $87 billion. Now you have $546 billion. So just for 1% of unemployment, right, was this Federal Reserve supposed to be their mandate? It cost them $546 billion in base money just for 1% of unemployment today. It only costs you 87. You don't have to inflation adjust this. This is just a multiple. It cost you 87 billion in 2000. Debt obviously has grown. It was 5 trillion in 2000. Now it's 27 trillion. That's an 8.3% compounded growth, or doubling almost every 9 years. Gold cap is about $1 trillion in 2000. Now it's about 10 trillion. Again, around this 12% growth rate. S&P with dividends. These numbers are with dividends, in case you're wondering. 7.7% growth. So you had to be, even if you were invested in stocks, you wouldn't have kept up with gold. You wouldn't have kept up with government debt. You wouldn't have kept up with the growth of base money. And then bonds is actually just a total return index by Bloomberg, 4.7% for government bonds. So again, just putting the numbers out there, really without much analysis. Make of it what you will. But you want to start to look at things this way rather than look at an inflation, is because these sort of metrics, like when you look at just how many X did it take, how many dollars of base money per unemployment percentage or per GDP. Those things are more interesting to me than inflation. And this debate comes, every like couple quarters. Peter Schiff gets on CNBC before he starts bad mouthing Bitcoin. He talks about inflation. Everybody talks about it. It's interesting that this inflation debate is rearing its head again. One thing I can say, I'm never, ever, ever going to have inflation on the website. I don't care how or amazing it gets, or if people like it or they don't. You will never, ever see a government inflation, a government CPI, PPI, a government created index of prices on my website. It's just worthless. I mean, it's a completely worthless thing to analyze. As John Williams, you and I did that calculation on Shadow Stats a while back. John Williams uses the calculations that they did in the 80s, and he gets a very different number than the numbers they produce today. But even then, like, look, John Williams has this, he's kind of typically a bearish guy. I'm not typically bearish in general about a lot of things. Like I said, there's great things about the Japanese economy, maybe not so great things. There's great things about the US economy, maybe not so great things. But if you want to look at what we're interested in here, which is money, then you got to look at the actual numbers. You got to look at the balance sheet, look at the supply, look at the real thing. This made up thing about prices, it's just never going to be accurate. I remember after the 2008 crisis, like 11 years ago, 2010 maybe. I forget. I can't remember if it was a New York Fed governor, but it was in New York. I think it was a New York Fed governor. It was like talking to a group of people in like Brooklyn. And he's saying, because inflation was just prices obviously were skyrocketing. I know you've written about this wonderfully as well, about, just obvious samples of prices that are so much higher than they were a year ago, 2 years ago, 3, 4, 5 years ago, 10 years ago. But even in 2010, prices were skyrocketing and people were struggling. And obviously they were struggling for their credit problems as well. But he's like, he's like, it was like a town hall kind of thing. He's like, you got to look at the whole picture, like technology is helping, iPads are going down. And this one person in the audience is like, I can't eat an iPad. That's the basic thing. I mean, it's just, it's nonsense, man. I can't even, I have no patience for the deflation debate, or like what the CPI means. It's just worthless. It's impossible. It's
literally impossible.
Your threshold for some price index is going to be different than mine, because you're going to buy things that are different than mine. You might have a different threshold, meaning like some tolerance than I do. It doesn't mean anything at all. There's no way that you can manage prices.
Well, that's why I think of this chart on Tweet 55 that you have pulled up. The $1 base money will get you X dollars of GDP compared to 2021. I think that purchasing power, or that productivity of that dollar, is that how you describe it?
Yeah, they call it. They use a multiple. They call it a multiple. That's been used in the media, and you do not need to inflation adjust that. It's the numerator is the same, denominator is the same. It's just a multiple. You don't need dollars. So you can say X. Like $1 of base money used to be 17x on GDP. GDP was 17x $1 base money. Now it's only 3.6x.
Yeah, so you have to spend a lot more dollars to get the same amount of GDP that was being produced in 2000, which is.
But you do not need to inflation adjust that number. You do not.
No, I mean that's what I'm trying to get at. It's like maybe a better metric than inflation.
That's what I'm hoping to do by
right
numbers out. Yeah.
Yeah. No, that's a pretty stark number too. So you would need more than 5x the amount of dollars today to produce $1 of GDP than you would have in 2000, which is, that's scary. So like, I guess jumping back into like the update Q1 2021 and where the Fed is right now. And I know you don't want to put inflation in your numbers. That's like the big topic this week. CPI came out at 4.2% April, right, year-on-year growth. And that's shocked a lot of Fed officials. So I don't want to focus on the actual inflation numbers, but just the fact that the Fed expanded the monetary base significantly over the last 14 months and is shocked that inflation is running hotter than they expected. And mind you, the Fed has set a target above its typical 2% target because it actively wants to overshoot their inflation targets to attempt to stoke the economy.
Yeah.
And
I mean, it's obvious. I mean, like what a lot of people don't know is from March, basically about a year ago in March, obviously when COVID stuff started, another drastic step the Federal Reserve took was it abolished this thing called the reserve ratio. And I don't know what the reserve ratio is. You don't know what the reserve ratio. The Federal Reserve damn near doesn't know what the reserve ratio is, but it is a ratio that is supposed to be there for the safety of depositors. So basically, that is for all the demand deposits that are out there, banks are supposed to keep about 10% in base money. This is this base money. It can be reserves or it can be actual cash. And actually, in fact, it's about 4 cents on the dollar in reserve is in cash, actual money in the vault. It's impossible to do. You can't keep this money in the vault. There's no vault big enough to do it that way. So most of the reserves anyway are in bank reserves. They're not in cash in the vault. But anyway, they abolished that last year. And the reason they did that was because massive stimulus, massive money printing, and there was no possible way that when the Treasury starts sending all these checks out, also the Treasury has a huge balance with the Fed now, which I don't want to confuse listeners based on what we were talking about before. It's just another, what's a good word here to use? It's just yet one more finagling,
changing of the definitions, right? Like they changed the facilities, the definition of the facilities, and
all of those two. It's another sneaky thing they're trying to do. It's just a sneaky thing. It's a little bit of some trickstery that that they have a huge balance. So this again, back to I'll get into a little bit. If the Fed was independent, all right, they could do whatever they want. They never have any. Like if it really was independent, they would never ever listen. They wouldn't have to ever come in front of Congress. They wouldn't do anything. They just do whatever they want, and they manipulate the money supply as they see fit for the betterment of the economy. That's what would be independent. They're not independent, as we obviously know, but they're really not independent with this Treasury bonds. So they have about like over $7 trillion in bonds as an asset, Treasuries as an asset, as we talked about on their balance sheet, which is huge. Because remember, this is another thing that I have yet to put on, but I will. 7 trillion is on their balance sheet. The debt, as we see on this slide, is 27 trillion. That ratio is the highest it's ever been, no doubt. That's a huge number that they themselves control. But on the liability side, the reserves, right, which go into the economy, the money supply, that's only, as we see here, 5.8 trillion. But that difference, about 1.2, I haven't even checked it exactly. It should be around 1.2, 1.3 trillion dollars. That's the most hilarious, like amazing thing that anyone would love to have. It's basically the Treasury having a checking account with the Fed buying its own debt. Like there's nothing more hilarious about that. Like it's completely off market, right? It's like sitting at the Federal Reserve. They have their account, and other nations are doing this too. Norway has some weird ones that has some big fluctuations. I think it has to do with their pension fund scheme. They have some really weird fluctuations in their treasury. I haven't analyzed it enough to say anything more about that, but I will in the future. Norway does it. The Federal Reserve is another one that's doing it like crazy, and the European Union a little bit, but not as much. But basically, this 1.2 trillion, it's like, I don't know. I'm going to sell some bonds to raise money for a hotel, but I'm going to print the money myself, and then keep it on my own balance sheet, and people are going to accept that money and build it. I mean, it's complete distortion of the market. It's like the most extreme distortion of the market as you can think for that 1.2 trillion. It's a smallish number compared to the 27 trillion in debt, but it's still a big number. In any event, a lot of that has to do with the stimulus checks. That's sitting as it's a Treasury's account at the Federal. The Treasury pays their contractors, their expenses out of this account. It's sitting as a major like checking account asset for the Treasury, even though they have the liability outstanding and sitting with the Fed as an asset. So they just have this $1 trillion balance with the Fed, and like stimulus checks are coming out of that, and all sorts of other payments. And once that starts to circulate through the economy, like there's no way you can hold these reserve ratios. I'm bringing it back to the reserve ratio point. The reserve ratios would just, there's no way. So they just abolished them a year ago. So they're doing different things. Europe has different reserve ratios entirely. They have something like 1%. In the US, it's like 10% for the biggest banks. It was 3.5% for the mid-sized banks. There was no reserve ratio for the smallest banks. is another problem I have with central banking. As I've said before, like none of us know what the reserve ratio is. You need the free market to do that. You need banks competing in the market with one another. Central bank doesn't know that. They can't know it. It's impossible. It's a planning board. It's socialist. There's no way. But it's some more shenanigans was the word I was looking for earlier. It's just more shenanigans and trickery that the central bank is doing. And yeah, these are reasons why you're seeing this inflation. Money supplies are shooting up in all ranges now, like demand deposits, because people are depositing these treasury checks. There's no way that the reserve ratio can stay intact, so it's been abolished. The ratio just keep getting more insane. I mean, from that date that I have on this chart, 2000, that was like the last time you had something normal. And then once you had .com, and certainly once you had 2008, but even after .com, like nothing is normal. Like it's just not. Again, normal was an important thing. I mean, people used that for 50 years, to 40 years post Bretton Woods collapse, to talk about like what central banking should be, and everything is just completely off the map now. So again, I don't know where that's going to go. I don't know exactly. I'm not saying Bitcoin goes to $1 billion tomorrow, but obviously there are signs, that it's pointing to.
Yeah, I mean, it started in September 2019 when you had the overnight repo spasms.
Yep.
Right? They expanded their facility there to allow the FICC to access the Fed window so they could essentially bail out margined hedge funds. Correct.
Pre-COVID. So
Pre-COVID.
It's not just COVID that this stuff was not working out. There was no way that we're not going to start printing money in 2020 anyway, because of those problems, as you rightly put. So
well, let's get back to the topic of like, have the Fed and the Treasury merge. You mentioned her earlier, Lynn Alden and I last time she was on the podcast. We talked about 1940s, the inflation that was going on there, and during that decade, the Fed and the Treasury basically essentially publicly merged and made it very public. And she would make the argument, I believe, that in the last year, the Fed and the Treasury have essentially merged, but haven't made it public yet. And you see signs of this, like last week, Janet Yellen sort of posturing as the Treasury Secretary to force Jerome Powell to act in a certain way. And then they had like a little back and forth. And what you just described, like them holding 1.2 trillion that was just created out of thin air as a bank account.
With the Fed, and then the Fed holds their treasuries. It's completely removed from the market. It's like Twilight Zone. I mean, it's just the most made up thing you could have. There's no market participants at all in that transaction. Just the Fed and the Treasury, and then us getting stimulus checks and other things, which will go into the economy.
It is going into the. I mean,
yeah,
that's what's frustrating is you have the biased financial media pundits just staring you straight in the face through the TV screen. Like there's no inflation.
Yeah.
What you're feeling at the grocery store, at the gas station, as you're trying to rent or buy a home or go to college. Don't worry about any of that. That's not.
What are some good arguments, if any, that you hear from people trying to say that there is no inflation? Do you hear any?
No.
Good arguments?
I mean, there isn't. It's hard. It's hard to take their argument seriously when you're looking again at your grocery bill or at your how much money you just paid to fill up your tank, or right now I'm looking for apartments. Potentially not apartments, looking to rent a home, potentially buy a home. But I think I'm just going to remove myself from even thinking about buying a home because it's just so overheated right now. Like you just hear stories, family members buying homes, having to go same day cash offer, 20% over asking and 10% over asking. If you do that, you're not going to get the house, and it just keeps small suburbs in Philadelphia that should not be appreciating the way they are. Their real estate markets are running crazy. I spoke to a gentleman last week who's got a cabin in the middle of Oklahoma he bought last year. He's like, yeah, I could sell it for 80% above what I bought it for. Just like in the middle of Oklahoma. It's like, what is going on? Like, how's there no?
Yeah, and let alone the most important things with medicine, healthcare, food, and education. I mean, who even knows what's going to happen to education in the Western world these days. But can
I'm
you
hoping it
honestly tell me
implodes.
can you honestly tell me there's no inflation in those sectors? I mean, the quality's worse, the prices are higher. I mean, I can guarantee you, like I went to public university, University of Cincinnati, graduated in 2006. I can guarantee you it's over. Um, it's maybe 2.5x what tuition was when I was there. 15. I mean, it's well above this 2% doubling every 30 years, which Federal Reserve targets. And
It's leaking down. It's leaking it down in the high school. I went to a private high school. It was $12,000 my freshman year. And after like 14 my senior year, it's like 25 now. I graduated in 2009, so it's 12 years.
Yeah,
that's a doubling in 12 years. So it's not a 30-year doubling. It's less than half that.
Yeah, exactly. So I think when they say 2, it's at least 4, and then it just doesn't matter. I mean, like it's different for every person. It's just there's just no way. This is a planning board. Go back to what I say. It has nothing to do with racism or SJW or BLM or whatever. I mean, look at where I am right now. The former Soviet Union is doing fine now. We do have some saber rattling from our easterly neighbors, but like all white people over here had nothing to do with it. Their economies were shit for 50 years. Generations of people truly were like they lost their identity. Like they of course they find a way to get by, but like there are a lot of tragic stories coming out of the Soviet Union, suicides and all this other stuff. It's socialism. That's socialism.
It's starting to happen here. And then you had the Fed, the New York Fed specifically posturing like they're gonna solve social inequalities, social inequities, I think is actually the word they used. You have the Biden administration leveraging the Treasury to go print this money to do a Green New Deal, shutting down fracking on federal lands, forcing the economy towards unreliable renewable energy, which will inevitably drive up electricity prices. We've seen this happen in Germany already. Germany's a perfect use case for this. They've had this transition over the last 2 decades, and the residential price per kilowatt hour is like 35 cents, which is insane. It's like 3 times what your average price is here in the United States. And then you're seeing all this central planning in terms of money printing and then directing the goods and services that American citizens can actually leverage and work on. And it's completely distorting the markets in more ways than one. It's I mean, and again, I've told this story many times on the podcast, saying when I worked at the Managed Futures Fund, I had a CIO who grew up in Soviet Russia. He immigrated here in the 90s. And after the Patriot Act specifically, he began to like pay attention. He was like, oh shit, this is turning into the Soviet bloc I fucking ran away from. And it's hard to deny that we're not becoming this very centrally planned government or economy, excuse me, that the government, whether it be Trump or Biden, right? Like it doesn't matter. It's bipartisan. You pass the baton and just keep taking us further down the decentralization road.
Yeah, and that's a scary thing for sure. And I've been started to allude to it earlier, right? But I've been through that route. As I said, I'm a bit older than you, almost 10 years. And so like I was doing a lot of this, maybe, I was bearish a long time following these like perma bears like Peter Schiff or Jim Rickards or John Williams. And at some point, like I didn't want to do it anymore just because, everyone has their own life. You got to protect your family and just have fun and everything. And I was actually okay with that. Like, we had Bitcoin, we were where we were, economically, it wasn't that great, but we had Bitcoin. So like, I felt okay about just, being kind of a lazy anarchist, like not really working they're not really caring too much any like dated other than following the monetary base because it relates to Bitcoin. Like I wasn't following like all the other inflation numbers or stuff like that. I just got tired of it. And, lazy anarchist was one I'd use a lot. I'd rather have go to a good cocktail party and talk to people and just enjoy conversation rather than trying to immediately, like after the weather, like get political and, be mad about it and stuff. And I'm not saying that's what you do. I'm just saying, I know, I definitely know where you're coming from. I've changed definitely over the last like 10 years, but I will say it's very depressing to see what's happened over the last year, not only in the U.S. but in Western Europe. Western Europe's like U.S. is actually doing better right now, COVID wise, for like a freedom and stuff that you have, and the rights that are afforded to Americans compared to like Canadians or Europeans is better in the U.S. And that is better, but here it's not at all. And they're like, I mean, the I don't know, it's just like these inner workings of this like fear of like someone coming over your border, and like the dictatorial arm of the government has to just like immediately like just shove its fist in the air, and like where you have to just, all right, like you're not going to be able to go outside, for a period of 3 months. Like you're not Germany, you're not going to be able to cross borders, even if you're just a regular trucker, which they were doing for like 3 months now. And like, even if you were vaccinated, like all this, like they're really hardcore draconian things that are happening all around Europe. And it is pretty scary, and it's tenuous. It's very tenuous. And I have my perspective is a bit maybe unique, or not unique, but I guess different than, let's say, like a libertarian, like in Texas, right? So Texans are awesome. They're independent and they love their, freedom and all that. I would say that probably libertarian in Texas wouldn't even really care, which I understand why, but they wouldn't even really say like U.S. should be meddling where they are in Eastern Europe. But that's just a hard reality. Like again, we're not 500 years into like an amazing future where private property and insurance and Bitcoin and everything. Like this is just now, it's really tough because we're seeing. I mean, my wife is from Belarus. I mean, she's Lithuanian, but her family's from Belarus. They're just going through massive revolutions, like staged suicides, protests. I mean, they're just getting beaten down. Russia, it's happening now. Ukraine, it's been happening since 2014. I was there actually just before it erupted. It was the middle of the second week in the Sochi Olympics, the second week of the Sochi Olympics, and then Putin went into Crimea a couple weeks after that. I don't know why these crazy dictators feel like they need to just take, well, I do know why. Power is addictive, and you take advantage of this when the chips are down. But it is bad. It's tenuous right now. I would say like it's unnerving, because this is like, I'm in the former Soviet Union. None of these, like, I can understand if a libertarian from Texas would be like, all right, just don't fuck with the policies there. Like we have to like let these people solve it on their own. Like we say with much of U.S. foreign policy, right? Like bring troops home, stop, messing with stuff. But I would just say, at least for now, where I am, thank goodness that we do have this alliance, which I also know is contrary to Jefferson, right? Trade with everyone, alliance with no one. Okay, it's contrary, but we have the NATO alliance, which is important. The Baltics, where I am, uniquely as well, one of the three of the few countries that make their quota of defense spending to GDP. Very unique. I mean, and Trump actually said that at the beginning of his term, like, you guys got to raise your spending, right? I mean, we're picking up all the slack. And it's true. I mean, it's embarrassing for Europe, really. I mean, like, there was a time when the US had more than 90% of the NATO budget. Like, it was just, I mean, it is embarrassing that Europe can't keep it up more. But where I am, they absolutely understand it. They absolutely understand the tenuous, delicate, like, situation of freedom that just how delicate it is. And unfortunately, big countries like to play ping pong with smaller countries. You have these proxy wars. We're having proxy wars in Ukraine. Syria was about to be a proxy war. Yeah, it's just like there are these proxy wars that big governments like to play, and it's scary, especially with the virus. Like I thought you could sort of get around it, travel, stay independent, stay free, but the virus, they've shown us that they can just ground us, and it's really unnerving to be over here. I can say, unfortunately, not to be too much of a Debbie Downer, but it is
scary here. I mean, luckily here in the United States, this is one thing that's been very encouraging. If we're going to silver line the last year, is this, I don't want to say regression, but like a retreat to states' rights and letting the states sort of figure it out, which has been
good.
Incredibly encouraging to see, and it's a trend that I hope only gets stronger from here on out, and I think will get stronger, the United States particularly. But like you meant, like Canada is fucking insane right now. Not only the amount of money they're printing, but like what they're doing to people is it like dragging pastors out of church, forcing people to stay in hotels and then pay for it when they travel abroad, when they come back, literally being able to pull people over without any suspicion other than the fact that they may be infected. It's insane. Yeah, it is incredibly scary right now. Like, what is the future going to look like? Like, what? Like, so back to like monetary policy. It seems like you're just going to print and print and print. And so that's like the other thing. The newsletter I read earlier this week, the pipeline shut down here, even though it was driven by a ransomware attack and a cyber attack, if you will. Pipeline still shut down. You have gas stations in the southeast of the country running dry, regardless of what the impetus for that lack of gas in those areas is. It's just something, a little tinder, a little fire on a little bit of tinder that can lead to a little bit of confidence collapse in the system. And that's enough. So maybe this is an interesting conversation we could have towards the end here, is like, how much of currency debasement is the expansion of the monetary base versus the collapse in confidence in the ability of the central bank or the government to maintain the monetary system?
Can you ask that question another way?
So the Fed has printed a bunch of money,
right,
over the last decade, particularly.
Right.
Yeah, like things are okay. Inflation's not reported. Inflation's not that high. People are still living.
Yeah, but we know that it is, right?
Yeah, but like, is currency debasement part monetary expansion? Yeah. Like what we got here. Like, how does it get to this point? Was it more expansion or lack of confidence in the ability to maintain the monetary system?
Yeah, it's a good question. I don't think I know the answer. I do think I understand that it can happen quickly. And I do think that a good system can be resilient. I've said this as well. I believe on your show, I've said it in many places, but basically the worst of the Canadian Great Depression, which they had one as well, was worse than the U.S. Depression comparatively. And U.S. had umpteen thousand bank failures. Canada had zero bank failures. So their system was resilient. It was more decentralized. There was no central bank at the time in Canada. So you see you can, at least with those examples, in Scotland as well. I talked about this on Nick's show as well. There are this examples like the Ire Bank, or certain banks that fail, certain banks that don't. Sweden had a free banking history as well in certain times. Like, there are systems that can show us that a decentralized, free of any government monopolistic control and mandating of this stuff with the iron fist, like that can help you. And this is why I say as well, to bring it back, I know I'm gonna get a jet soon, but like to bring it back I'm definitely speaking to like the Bitcoiners who are trying to learn this stuff, trying to figure it out. They're hearing, information overload from so many different places. Like, yeah, it's hard to make sense of it all. But I would just say, thank goodness that we have Bitcoin that is that escape hatch. It is that escape valve. It's practical, right? Like, because even though we talk about like this, there's real geopolitical issues. Again, I wish we were in, some free, completely anarcho-capitalist society 300 years from now, how long it will take, where everybody is protected, relatively on balance, with some private property, private insurance, private healthcare. Just don't have that. So it's going to be probably a battle. But I would also say, I hope the cooler heads will like prevail from like the geopolitical issue. But even if they don't, definitely Bitcoin is like the biggest tool that we have to protect our wealth from this inflation, where, they basically steal your savings. So I'm jumping around a lot of topics, but like, establish good relationships. Like, I work with your bank. Like, I'm not against banks. I know that's like, there's a lot of hardcore Bitcoiners like totally against banks, but like, work with your bank, try to get a good relationship. If you don't like your bank, Caitlin Long is, I don't even know the latest one. Her bank should be launching soon.
Yeah, I think it's already launched.
Is it launched? Has it launched? Great. So I have to check that. But like there are, competitive centralized crypto systems, maybe competitive decentralized crypto systems, I'm not sure, besides Bitcoin. But there are plenty of ways now where you can take control of your financial freedom and just step by step start to manage this stuff, which is just incredible compared to when I was in my 20s. When I was first time I heard about Austrian economics and fractional reserve banking and all this stuff was post 2008 financial crisis, where like, I'm watching YouTube videos from the 70s of Milton Friedman trying to, stumble upon free banking stuff from, Hayek and Dr. Selgin, Dr. White, works from Murray Rothbard, whatever. There's definitely like an academic side of this, which I really, really appreciate, really like. And I think that just stick with the facts, like stick with the numbers, definitely try to find the signal over the noise. You can do it that way by just looking at real numbers. And yeah, if you're going to read newsletters that reinforce your bias, read Marty's for sure. And yeah, just get after it. I mean, as far as, be entrepreneurial, work for yourself, become free. If you can't work for yourself at the moment, do it in your spare time. That's the best way to become entrepreneurs. Get paid by someone else, but then in your spare time, start your thing, start your gig, do whatever you're passionate about, et cetera, et cetera. So I'm really a big fan of that. Like just try as much as you can to bootstrap whatever interests you. I'm not like a super duper business owner, entrepreneur, whatever, but I've been working for myself for like 10 years now, and it's been great. And I've been doing things like this, like spreadsheets, and where I love to talk about them and crunch the numbers. And I hope to continue that, and I hope that younger Bitcoiners can it's amazing. Obviously, like we gotten very serious. I know you got to go soon, but like I've
got at least 20 minutes. So
okay, cool. Well, I was just saying, like I'm just to maybe switch it back to more of the positive stuff. I'm super stoked for all of the great stuff that is coming in Bitcoin, and yeah, I'm not necessarily like just sell everything into Bitcoin, only do Bitcoin. Like diversify if you want. Manage some income, try to get some passive income. Maybe a bank can help you there. Maybe an exchange can help you there. Maybe Avanti can help you there. I'm speaking obviously mostly to an American audience here. So yeah, just establish those relationships and keep looking at the signal, not the noise.
All right. Well, let's jump into this more like a free banking system built on Bitcoin. I mean, you mentioned it earlier. We mentioned Selgin. Selgin called me out particularly.
Oh yeah.
We had a little back and forth on Twitter earlier.
I'm not like, again, as listeners might know, I mean, with my delayed responses, I don't have it on my phone, so I'm not like.
No, you're better off for that. But
yeah,
somebody who has studied Selgin, studied Larry White, free banking, Hal Finney, December of 2010, described how a free banking system may evolve on Bitcoin. First, I want to touch on. Get your thoughts on why like a Selgin, Larry White of the world is so repulsed by Bitcoin, if you will. How do they not see this can bring their vision of the world to fruition? And then how would you envision a free banking system growing on Bitcoin? Because Hal, when he did it, I don't think you can envision something like the Lightning Network or Liquid at that time. Like, does that change the game?
Yeah. To immediately answer that last question, I'm not sure that Lightning changes the game. A federation like Liquid might a bit more, because I feel like there's a bit more flexibility there among, as much as I hate to say it, like a centralized party that can be more efficient, which is basically all a bank is as well. But I do think that Lightning it's amazing, it's unique, and it's never been done before in the history of money, in that you can actually lock Bitcoin and then immediately transact with it in a less secure but more amazing way. And it's locked. Like it's locked on the main chain. There's some fees you got to pay to work that out, and that's a question still, and ease of use and all the rest. But there's never been the case where you can lock base money basically lock it in place. Everybody sees it, you know where it is. It's just like, you know, locking gold or something. Instead of locking it in a vault and trading paper, you're actually trading little pieces of it, but, you know, a representation of it. It's not a representation of it, but it's hard to describe the stuff in Lightning, you know, sometimes in the traditional thing, but it is locked. It is absolutely locked on the main chain.
Fully reserved. You don't want to call it a note. What would it be? Like,
I don't know. It's a Peter Todd actually said this. I always use it in presentations as well. It's a middle ground. It's a middle ground. It's not fully a claim. It's not fully a claim like a banker's check, like a credit card, debit card, Venmo payment. All that stuff is a claim. That's why, again, base money, everything else is a claim. That's why it's simple. Bitcoin, everything else is a claim. Exchanges are claims. So it's not fully a claim, but it's also not fully under your control. There is a potential security risk. There's a potential risk with fees, everything. You might not get it back once you depeg. So it's a middle ground. He uses the word a middle ground state, which is amazing. I think that's like a perfect way to describe it. It's a middle ground state where it's not. There's just I look at things very simple. Like there's M1, M2, M3. There's claims and there's base money. Lightning is somewhere in between. Anyway, I do want to get back to your question about Seljan because I've seen this as well, and I like him. I like his scholarship. I like Larry White's as well. Our listeners probably know, you know, he's the first one that we interviewed, external guest. I would still say that the interview that we did, it's our very first episode with a guest, if you can find it. He gives great. We talk a lot about money, credit, Bitcoin, the differences, all that stuff, which, you know, again, just trying to educate and understand the stuff for myself as well. So I thought that was actually one of my favorite episodes that we've done. But I can't get inside of his head. He's been on a second time. We've talked to him a little bit about some of his things. He ended that first episode in one way, which I think is very important. Because I said, like, you know, what is the role? So I asked the question to him in the very first episode that we did. I said, when we talk about money, you know, it's just different. Again, like economics, there's hubris, there's all this stuff, right? But in something like, give me a comparison. So like in physics, we have the physicists that are like theoretical. They do their equations, they do their formulas, they have to balance, they have to this, that. But like really in reality, like what we care about when we want to live, get on with our day, it's the engineers that make things work, right? Like an engineer does not have to have an exact 90-degree angle for like the house not to fall down, right? I mean, it's, you know, it's not have to be exact, you know, like pure precision. Like how long is a meter? Like how long is a second? Like these things don't have to be exactly correct. They can still work. Society can still work, right? So in physics, the theoretical realm is physics. The real realm is engineering, as I see. Like, explain to me, Dr. Seljan, what do you see? How would you make that comparison with money? And he agreed with me. He said, I see where you're going. And he would say, yes. He said all this. He said, it's certainly not governments. It's certainly not economists. It's certainly not, you know, he and I compared economists to physicists in that example, right? Because they're the theoretical ones, they're the ones that do the equations, this and that. But he said, as far as actually the system, making this monetary system better, it's not the physicists. It's not the economists. It's certainly not governments. He said those words. It's as you said. He says it's the engineers, or it's, you know, it's extracting extra gold from the mine using cyanide, or, you know, doesn't sound very environmental friendly for their some woke haters these days. But like there are many things that happen in the monetary world. Claim banking, basically, fractional reserve banking is one of those as well, which I don't have a problem with. But then let's table that for another discussion. It is the engineers, the creative people, the business people that make money work in reality. It's certainly not economists. It's certainly not governments. Like they're not the ones that make things work, which is something I completely agree with. So I would keep that frame of reference in mind, and then you watch some of these tweets or things that these economists say sometimes about Bitcoin. I see where he's going. Like, I know the tweets you're alluding to, and you know, because you sent them to me, and I know we sent me some. I didn't actually see the ones where you interacted with him, but I read his.
He had that thread where he's just trying to say Bitcoin will never become money because it's got to compete with the dollar. Like money adoption comes down to network effects. You're never going to overcome the dollar's network effect.
Yeah.
I think that's just
so here. yeah. So again, like on our show, he's told me like it's not going to be like the economists or the governments that are going to do this. And I look at the dollar as a government thing. Yeah, the government could go away. The dollar would still function absolutely as money for a time. It would. I mean, the Somali shilling did this in the 90s. Somali shilling was just going around like, pirates and bandits using it, and there was no Somali central bank. It's an experiment in economics. It's worked. You don't need a government to have it work. So the dollar could work without the government, but I look at the dollar as a government project, right? I mean, it's government that's putting this stuff together, whether you're talking about national defense or the quality of our treasuries or whatever, which are always an asset if you hold them, liability to the government. The point that I'm getting to here is that he's talking about these like big picture things about money and Bitcoin, like he knows that the dollar is definitely an insurmountable giant that just can't be overtaken. But I don't know. He knows as well as anybody. I mean, there hasn't every 100 years or so that has happened. Like the dollar overtook the pound 100 years ago. Before that, the Dutch had the reserve currency. Before that, the Spanish, the Portuguese, the peseta de ocho was one of the most popular floating, freely floating pieces of silver around Latin America. So there are a lot of like, and they are government currency. Yeah, government issued currencies. But that there's been one over the last, couple hundred years. So like, I don't really necessarily see why he takes a stand that the dollar's network effect needs to be or is insurmountable just because it's the dollar or just because it's huge, because that's the argument that I seem to get that he was taking that stance.
Yeah, it's perplexing. It's like, how do you expect Bitcoin to develop that network effect overnight?
Yeah.
12 years even. Like, it's going to take time.
12 years. Exactly. It's going to take time. I mean, it's already remarkable. I mean, Jesus fucking Christ. It's number 6. I mean, it's number 6 right now. 7 if you include gold. But if you don't include gold, you have let's go in the ranking of monetary bases we have now. We have the euro is in US dollar equivalent, is more euros represented out there, units, as far as value goes. You have the euro, the dollar, then the yen, then the yuan, then the pound, and then Bitcoin. That's it. I mean, it's passed as of last year. As of this year, as of February, it passed the Swiss franc. That was a major one, major. It actually passed it on Musk's tweet, his original tweet back in February about Tesla using Bitcoin. Hasn't gone down below it when Tesla made their other comments about Bitcoin and energy. But anyway, it's number 6, which is very interesting. And again, I even saw something he said like, oh, I know there's gonna be a lot of Bitcoiners saying that, oh, it's bigger than Venezuela or whatever. And it is, but they still got to get in line behind the dollar. I agree. I mean, the network effect of the dollar, both base money and of claims that are people that have contracts derived in dollars, euro dollars that are held abroad, dollars meaning accounts, not actual physical dollars, because we're showing the physical dollars in our exhibit. I don't know what to say. I mean, like, of course, the dollar is been the largest network affected currency for the last 100 years. It's going at some point. I just don't think that it can continue forever, especially look at the jokers that come in and out of government these days.
Yeah, and well, you're already seeing its network effect wane a bit. You have the prize states, Russia, China, Iran. They're beginning to settle their exports in euro.
Going to go into euros. There's another reason to show the euro itself is a powerful currency. Again, I don't know why the euro shouldn't be in there, or Japan as well. Again, it's a very internal currency in Japan, but still, there are. I think it's this is also another thing I want to say. Like I'm like, if you want to be an economist and make these prognostications, and you want to make some, I don't know, even predictions, I guess, go for it. But that's just not my bag. I much more enjoy educating, tracking, finding the actual thing, describing it in real economic, legal, and accounting terms, and then trying to educate people about that. And then Bitcoiners, they're so grateful with their time and education of everybody else anyway. They're going to spread it. They're going to talk about it, and they, make your own decisions that way. So like, I think it's just going to be natural, organic, but there's plenty of like, there's another guy. So there's like three of the guys that kind of did this modern free banking schools, Dr. Seljan, Dr. White. There's another guy, Kevin Dowd. He, English, I guess. I think he's English, or is he? I think he's English. Anyway, he was talking back in the Ghash days about how Bitcoin was going to suffer from mining centralization and the whole project was doomed and all this. And I don't know if we should be saying this, but I was talking to Dr. Seljan and he was telling me that, like, I was not a fan of him saying that, right? Like I was just coming to my role as Cato. Like I was, Seljan's a nice, like proper guy. He was like, I'm just, I'm sitting there next to Kevin. He's just like trying to, we're looking for monetary alternatives. And Kevin's like just demonizing Bitcoin. And obviously that was wrong. These are days like 2014, 2015. Obviously that was way wrong.
So for anybody who's relatively new to Bitcoin, the Ghash story, what we're describing here in 2014, 2015, I forget what it was. Ghash was a mining pool. It amassed more than 50% of the network hash rate. I think it got up to 55. And obviously that makes the network susceptible to a 51% attack. People were freaking out. Peter Todd, who we mentioned earlier, famously came out and was like, all right, this may be it. I believe he sold some Bitcoin too at that point. But great case study in decentralization and the natural incentives built into Bitcoin. The hash rate on Ghash collapsed basically overnight. Miners went to other mining pools to make sure that the network was not susceptible to a 51% attack.
Right. And I only use that example because, again, this is someone supposedly in the same ilk, same school. I've read some of his writings, enjoy them. He appreciates free, decentralized banking in the olden days, which is absent of the central bank. I appreciate that as well. I think there's a lot of great scholarship there. There's great things to learn. Unfortunately, what we have found always, and maybe this gets into sort of the end of your questions, like how does Bitcoin fit in, or what can we do, or how does Bitcoin fit in a free bank system? Like, I think it's impossible. Basically, what is impossible is I think it's impossible to have a free banking system based on the reality that we've seen over the last few hundred years. I mean, if you have a system that works well, if it's in Sweden or Scotland or Canada or the Caribbean or somewhere like, remote, you can make some moats and you can make some interesting little experiments. But, whether it has to do with national security, spending, debt, your bigger neighbor, war, which is a scary thing to talk about now. Hopefully cooler heads will prevail. But if there's something that these powers that be don't like, and Scotland and Canada, particular good examples, I talk about this, Nick, as well, like Britain, England was below, just south of Scotland, same thing, US just south of Canada. Both of these systems were running beautifully for hundreds of years in either case. And they were free of central banking, and they eventually just succumbed to it. They couldn't keep it up. They had to start their own central banks. They had to join the central bank in the case of Scotland, and that was it. So I think it's impossible to go back to any sort of a fiat system. Gold has been tried. The Austrians, Mises, Rothbard, they were so fond of gold. They loved gold. There are a lot of Bitcoiners that love gold. I like gold. I have no problem with gold, but a lot of people, take it too far. There is only one shot, as far as I can tell, that's left as far as a free, sovereign, decentralized system where you can truly control your money and not have to worry about it being shut down or capital controls or KYC, AML or whatever. But it's going to be a battle. I'm saying nothing new here. I know you've talked about it with plenty of your guests on your show, and we're trying to educate people about it. Like I said, I would take the route of diversify a little bit, try to, get it, open up dialogue with your bank about Bitcoin. I don't know if your bank really hates Bitcoin, or if it's like, I don't know if B of A still hates Bitcoin, or like Chase might be on some services. Like these banks have been typically averse to Bitcoin in the past. Just move banks. I don't know. It's not going to get any better from that side. Digital currencies are starting. This is another thing. There is a proto digital currency in Brazil. It's called the Pix account. Fernando didn't actually point out, a listener did, a very kind of him to show that it's actually started. There's this it's not a blockchain based, whatever that even means, blockchain based cryptocurrency that's state backed, CBDC. But it's a centrally controlled app that you open on your phone, and it's working. And Brazil is a major economy, and so they're actually doing it. Like China's like rolling it out. They're doing it. They're going to do it. But that's actually a proto CBDC that's actually working. I expect CBDCs to continue. I'm ready for them. I'm ready for them on my exhibit. CBDCs will be a part of it. I'm prepared. I'm ready for banks to start reserving Bitcoin. I'm ready for central banks to start reserving Bitcoin. I'm ready for all this. So I know. Yeah.
You had a Fed official come out this week, I believe, and say that the Fed plans to launch a CBDC open source. They're going to open source the code and implementation.
How that works. I mean,
Release
obviously,
the
it's not going to be open
implementation.
source. And that's another thing. Like again, I wish I had need to talk to Peter Todd or someone about this. Like the technological side of this is just baffling to me. I mean, how could it be that if it is somewhat exposed electronically, like the balances of these currencies floating around, whether it be password protected or what, I mean, these things are going to get hacked. They're going to get hacked. Well, or Bitcoin's going to get hacked. So that's another risk from those. But they're going to happen. They're going to try. That's why they're doing it slowly. Let's see what happens with Brazil's currency here. It started in like November. So I'm ready for it. I'm tracking them. I would just say, keep your eye on the ball. Look at real numbers. Don't listen to gobbledygook people that don't, understand the definitions of these things, or just trying to, like, I don't know, sway you for whatever strange reason. Like, I don't even know the skin in the game that some of these people have that are no corners. Like, what are they getting, like daily updates from the Treasury, or the central government to tell them to say things? I don't know why it means so much to them. If they don't like Bitcoin, just stop talking about it and move on. But
yeah, it's again, like, is it like the concept of the elite overproduction? Is it something like some of these people don't like seeing plebs, the common man, take part in this? They need to be the arbiter. That's that's the sense I get from Selgins of the world and like the mainstream economists, the Matt Levines, not that he's an economist, but Joe Weisenthal
sure.
and others. They like, I didn't create this. Like, there's no way some anon on the internet could create like the new global reserve currency, and all these shit posters in their basements are participating, getting rich off of it. There's no way. My priors have taught me that this is not the way the world works, and it's just fucking with people's brains.
Yeah. So I'll read it. I'd like to see your interaction. To bring it back to Selgin and your original question, like I'm still giving him the benefit of the doubt as far as I know he's open to it. I just think he has some very entrenched, even though he said on my show, it's certainly not governments, it's certainly not economists that have come up with these monetary revolutions and support the monetary system. He said that, and he said that humbly, which I believe that he has
humility.
Humility compared to many other economists, certainly state-run economists.
No, I mean, I've seen Dr. Selgin. I saw him not interview, but debate Safe at the Soho Forum a few years ago, and I thought it was a very earnest and interesting back and forth. I do think Safe won the debate, and like the context of our first interaction was, yeah, you were at that debate.
That was Larry White.
Larry White.
What's his name? Rogoff, or was it the other one?
Yeah, that was Rogoff and White. Yeah, that's the one you were at. But Selgin and Safe debated as well.
I saw it.
Yeah, Dr. Selgin's, he basically said there's no way Bitcoin can compete with the US dollar network effect. Like, it would have to be
same song, same swan song.
Yep. It would have to be like a massive improvement. I just quote tweeted, it was like, Bitcoin is a step function improvement on the US dollar reserve system in the sense that it's scarce. It's a distributed peer-to-peer scarce cash system. So it beats it on policy, where you have a cap supply, and then it beats it on centrality, where it's distributed compared to the dollar. So those are two step function improvements. And then the network, the digital aspect of it, like being able to create lightning and transfer this stuff globally instantly. Well, not instantly, but settlement time compared to final settlement in the traditional financial system is orders of magnitude better and quicker.
Balances his budget every 10 minutes.
Yeah. And then he came back with like, we're working on instant final settlement within the traditional system. And I was just
that's strange to me. That's strange to me. I don't.
It's like my recent wire transfers would beg to differ.
and yeah, I don't know. I mean, he keeps trying to hedge. Like, from what I read in that tweet thread that you sent me, like, saying that I am a fan of Bitcoin, I hope it succeeds, but of course it's up against this and this. Like, he knows better than anybody that this stuff happens, shifts. It's juggernaut type stuff. It takes 100 years. Currency can switch over 100 years. Might not take 100 years, but it switches every 100 years, and it's just logical where we are in the digital age and everything. But I'm more concerned. So anyway, I don't know. He does what he does, and he's an economist.
Yeah, you don't have to speak on behalf of him.
No, I just say, because I know you know that I like his scholarship, and I've been, I would encourage people to read it.
I like his scholarship too. I would encourage people to read it too. It's like very important work.
Yeah, but then it is, which is, it's funny because going back to that pod, like he said, it's certainly not governments, it's certainly not economists that are going to come up with these innovations. It's the engineers, it's the developers. But he doesn't talk like that when it comes down to it. He's still talking the points of the economists from on high, really. I mean, from the economists in the Beltway, from the economists working with the Federal Reserve. So we'll see what those if he changes his tune. But I don't find anything interesting in following the next innovation of the Federal Reserve. I'd rather just track the monetary base and then follow the innovations of Bitcoin, because it's so much clearly better money, and you have more control of it, more sovereignty. And if you want to dip your toe into, or keep your toe in the existing financial system, like I said, keep working with your bank, try to get them involved in Bitcoin, try to just establish that dialogue. But like, there's just so many options now. It's amazing. It's absolutely amazing where we are.
Yeah, God. You mentioned Rogoff, and now I want to ask you a question about NERP.
Again, before we get to NERP, before we get to ZERP and NERP and all of this goofy, shenanigan type stuff, huge treasury balances with central banks, all sorts of stuff. The bottom line, as far as I can tell, there is that it comes back to the money supply. I mean, monetary policy is about the money supply. So they're going to tell you, like, okay, it's about unemployment. It's about controlling prices. They even give you their own definition of prices. It's this. It has to be this, right? I mean, maybe it's a little bit, there's a margin for error, this and that, but it is this. It's where it needs to be. Those are all steps below, and I would argue confusing steps below on purpose to confuse the public, like talking points. Again, the Fed is independent. All these things, talking points from these journalists and from these whoever they're taking their notes from, their cues from. None of that is as important as the money supply itself, which they solely have control of. And then, of course, that relationship with the central bank is putting a floor of price on their bonds, buying their bonds when no one else will buy their bonds, therefore increasing the price of bonds, lowering the interest rate of bonds, which will lower the rate of debt that they have to pay back. Those are the most important things when it comes to money supply. It's that symbiotic relationship between the central bank and the government. And I don't see that ending anytime soon. We can't end it. Like, this is, I was railing about this in my 20s. It did me no good. There's no reason to talk about it. We had Bitcoin. So I honestly, like, when someone shows me, talks about like NERP or something in Europe versus the US, I show them a picture of the monetary base of both. So like, it just, this is what you need. This is the supply. This is the actual supply of money. Like, don't talk to me about the interest rate. I don't care what some bank that's connected to the Danish central bank, who's, might be getting some money actually to borrow or whatever. I don't care what they're getting and what that is doing to the economy. I care about the value of the money in my pocket, and the money supply is what's going to affect that. So show me the money supply. Don't show me the interest rate. I don't care about the interest rate, the target rate, all that stuff. That's just, it's secondary. It's sort of a don't look over here, what the hand is doing. Like, it's secondary stuff. The money supply, as Bitcoin again shines that spotlight, that's where the action is at.
Especially because that interest rate is only a target, and they try to reach that target by manipulating the money supply.
Yeah, exactly. I mean, no one says that anymore. Like, they reach the target by manipulating the monetary base. Has everything to do with the money supply, with interest rates, with like the money supply is the crux of the matter. It's the source. It's the, you can't go any further back. And it would be great if we didn't have central banks manipulating the money supply, causing these price controls, causing boom and bust cycles. It'd be great. if we didn't have it, but unfortunately we do. There's, national security, welfare, all these sorts of, politicking comes in. You can't get away from these discussions, unfortunately. They're clearly dependent on each other. It's a symbiotic relationship. They're not independent. The central bank is never independent. It's obvious. And just look at the money supply. If you want to worry about the value of the dollar in your wallet, or the yen in your wallet, or the euro in your wallet, look at the money supply. And, that's the only economic statement that I make. Ceteris paribus, your rising money supply is always going to lead to an increase in prices.
Well, freaks, Matthew is diligently tracking the money supply over at Crypto Voices. Where can we find out more about you, your updates?
Well, thanks, Marty. Yeah, I mean, least I can do compared to what some of the real developers and people are doing out there in Bitcoin. CryptoVoices.com. I've said this again, it's a broken record. It will get better. It will get faster. It's going to be awesome. Hopefully get a little subscription site going as well for some dedicated listeners to actually, see this a little bit better and more intuitive, more interactive. CryptoVoices.com/base money for what we're talking about. And then we have podcasts as well, sporadically at the moment.
I've said this many times. My favorite Bitcoin economics podcast out there. I learn a lot from your podcast, and I always learn from our conversation. So thank you for your time this evening where you are, this morning where I am, and can't wait to do it again, man.
Absolutely, brother. Really appreciate it. It's great.
Peace and love, freaks.